Hello students, this is Gurjit Luthra, your accountancy teacher. So continuing our discussion for the journal GST, today is our concluding lecture on a journal involving GST, goods and service tax. We'll be doing some practical illustrations so that you can be quite familiar with the various transactions relating to GST journal and you can be concrete about the concepts of GST. Let's start with the first illustration. Example 1. Sold goods to Aman at list price 20,000 less trade discount 10%, CGST and SGST at the rate of 9% each, and cash discount is 5%. He paid amount immediately. Sold goods to Aman at list price of 20,000 less trade discount 18%, CGST and SGST at the rate of 9% each, and CDS 5%. He paid the amount immediately. Now let's start with it. Solution. First of all, our list price is equal to 20,000 minus trade discount is 10%, which is 2,000. Our sale price 18,000, CGST 9%. So 9% of 18,000 is 1,620. SGST again 1,620. Total amount 21,240 rupees. Okay. Now cash discount. Cash discount is 5%. So 5% of 21,240 is equal to 1,062. So net cash paid is equal to 20,178 rupees. Now our journal entry. Cash account debit this amount 20,178 rupees. Cash discount is discount allowed account debit 1,062 to sales account. This is our sales price 18,000 to output CGST account 1,620 to output SGST account 1,620 rupees. Is it clear? Okay. Next. Example 2. Supplied goods costing 6,000 to Manav at 10% above cost, 10% above cost less 5% trade discount plus IGST at the rate of 18%. I hope you have understood the question. Supplied goods costing 6,000 to Manav at 10% above cost less 5% trade discount plus IGST at the rate of 18%. Solution. Now, cost of the goods is equal to 6,000, okay, plus profit on cost is 10% above cost. That means 600, 6,600 at a trade discount of 5%. 5% of 6,600 is 330 rupees. So net sale price is equal to 5,270 rupees. Sorry, 6,270 rupees. Okay, and IGST 18%. 18% comes out to be around 9, 2, 1, 1. 1,129 rupees. Okay, and the total amount payable is 7,399. So our journal entry will be what is the name? Manav debit 7,399 to sales account. Sales is 6,270 to output IGST account 1,129 rupees. Clear? Number 3, example number 3. Goods of 2,500 distributed as free samples these goods were purchased at CGST and SGST at the rate of 9% each. Goods of 2,500 distributed as free samples. These goods were purchased at CGST and SGST at the rate of 9% each. Solution. Journal entry for this will be advertisement account debit to purchases account. Goods are of rupees 2,500 to input CGST account 9%. 9% of 2,500 comes out to be 225 to input SGST account 225 again. So 2,950 will come in advertisement. Is it clear? Number 4. Amit, a customer, to whom goods were sold was allowed a rebate of rupees 2000 because they were of poor quality. Goods were sold at CGST and SGST 9% each. CGST and SGST 9% each. Just try to understand the meaning of this term. That Amit, a customer, there was a customer Amit to whom we have sold goods, but now he has been allowed a discount. Rebate means discount of rupees 2000. So earlier this discount would have been charged to his account only. That means to his account would have been debited with this amount when the sales were made. Now he is being allowed rebate. So that means whatever CGST and SGST, output CGST and SGST had been charged from him, that has to be reversed. Now the journal entry for this will be rebate allowed account debit 2000, then output CGST account debit 9%, that means 180. Output SGST account debit 180 to Amit 2360 rupees. I hope it's clear. Let's move forward to example number 5. Example 5. Now try to understand this. This is a bit typical one. Sold goods costing 1 lakh. Sold goods costing 1 lakh to Arun at a profit of 20% on sales. Profit of 20% on sales less 20% trade discount plus CGST and SGST 9% each. 9% each. Paid cartage rupees 250, not to be charged from customer. Not to be charged from customer. Is it clear? Now let's see this transaction once again. Sold goods costing 1 lakh to Arun at a profit of 20% on sales. Here we are given cost, but the profit is on sales. Less 20% trade discount. Now always remember, if profit is equal to 20% on sales, it will be equal to 20 over 100 minus 20 on cost. That means if profit is rate over 100 on sales and we have to calculate it on cost, it will be rate over 100 minus rate on cost. And reverse, if profit is equal to rate over 100 on cost, it will be equal to rate over 100 plus rate on sales. But in our case, this particular equation applies. So here, cost is equal to 1 lakh, profit is equal to what I've told, 1 lakh into rate over 100 minus rate, that means 20 over 80. That comes out to be 25,000. This is the profit amount. 25,000 is the profit on sales. Okay, total comes out to be 1,25,000, and then 20% trade discount minus trade discount, which is 20%, that comes out to be 25,000. So sale price is equal to 1 lakh. Sale price is 1 lakh. Let's once again see this. Cost is 1 lakh. Why we haven't calculated 100 over 20 over 100? The thing is, like we are given the cost in the question, but the profit of 20% is given on sales. So that means we have to resort to profit percentage also on the cost. So cost is 1 lakh. Profit is equal to 1 lakh into 20 over 80, that is 25,000. So net amount is, the total amount is 1,25,000. Trade discount is 20%. 20% trade discount means that 25,000. So again, it comes out to be, selling price comes out to be 1 lakh. And now apply the rate of CGST and SGST. CGST is 9%. 9% comes out to be 9,000. SGST again 9,000. Total amount is 1,18,000. Now our journal entries. First, for the sale, the journal entry will be to whom we have sold the goods. Arun. Arun debit with the total amount 1,18,000 to sales account. Total sale price is 1 lakh. To output CGST account 9,000. To output SGST account 9,000. This is our entry for the sales. And now for the cartage. Cartage, they have told that cartage of rupees 250 not to be charged from customer. That means we ourselves have paid the cartage. So this cartage which are paid on sales is called cartage outwards. So the general entry for this will be cartage outwards account debit 250 to cash account 250. I hope it's clear. Now let's see another example. This you'll solve yourself. Sold goods costing 2 lakh, let it be 2,70,000. 2,70,000, goods costing 2,70,000 at 10% above sale price at a trade discount of 20% and cash discount of 10% to Rajat. CGST and SGST are 9% each. Half the payment received by check. I'll repeat the question. Sold goods costing 2,70,000 at 10% above sale price. Given as cost, profit is given above sale price at a trade discount of 20% and cash discount of 10% to Rajat. CGST and SGST are 9% each. Half the payment received by check. So you have to do it yourself to find out the solution. So this sums up our chapter of journal GST. It will be followed by some assignments and some more questions, and hope you have understood all the concepts of journal. And if you have any difficulty, you may contact. Thanks for the day, and please watch the video carefully. Try to solve each and every question which we have done so far. All the best. Thank you.